Good evening. India's headline indexes fell for a second week, but the more useful story is what held up underneath. Nifty ended at 24,252, down 0.47% for the week, while Sensex lost 0.60%. This was rotation inside a cautious market, not indiscriminate selling. Bank Nifty gained 0.47%, private banks rose 1.26%, and small caps, metals, and realty also advanced. IT and FMCG fell more than 2%. Monday began the week with a 0.32% Nifty decline. Tuesday's loss deepened to 0.55% as oil moved above $91, and hopes of a fresh United States-Iran arrangement faded. For India, costlier oil can pressure inflation, the rupee, and company margins. Wednesday extended Nifty's losing run to 7 sessions. Thursday finally broke it. Steadier global bond markets helped IT and financials lift Nifty by 0.64%. Higher overseas yields matter because they raise the price of capital and make emerging market equities relatively less attractive. Friday was almost flat. Even so, private banks and small caps advanced while IT remained weak. That confirmed the week's main message. Price leadership rotated between sectors rather than weakening everywhere at once. The cash flow evidence adds an important layer. Foreign institutions sold a net 1,601.65 crore rupees across the 5 sessions. Domestic institutions bought 17,316.34 crore rupees. The wider market held up better alongside that domestic buying, although the headline indexes still fell. From a technical analysis point of view, the daily and weekly charts are not yet telling the same story. On the daily chart, momentum started turning up from an oversold area, and Nifty finished just above its 34-day average. But it remained below the 9 and 20-day average cluster near 24,300. The weekly momentum line was still moving down. In plain English, a short-term rebound is trying to form, but a broader repair is not yet confirmed. Expiry also kept the closing auction relevant. On Tuesday, Nifty's auction close was 10.90 points below its 314 price. On Thursday, Sensex closed 49.53 points above it. In both cases, the move stayed inside the uncertainty already priced by the at-the-money call and put pair, and that option premium fell sharply once the final close was known. The practical guardrail is simple. On expiry day, the price visible just before the auction is still provisional. Next week brings monthly Nifty and Bank Nifty expiry on Tuesday, followed by Sensex expiry on Thursday. Friday's open interest map placed 24,300 as the nearest call-heavy test, with put-heavy areas at 24,200 and 24,000. Those positions can change when trading resumes. Outside India, Wednesday brings US growth and inflation data. Friday brings India's industrial production report. Growth data can change the outlook for global yields, while inflation and oil influence how much room central banks have on rates. So 3 questions matter next week. Can Nifty reclaim and hold 24,300? Can the strength in banks and smaller companies broaden? And do oil and global yields cool? If those signals improve together, the repair can widen. If they do not, the week's rotation remains a cushion, not yet a new trend. This is market analysis and education, not investment advice or a recommendation to buy, sell, or hold any security.